I now hand the conference over to Mr. Amit Sanghvi, Managing Director. Thank you, and over to you, sir.
Thank you very much. Good morning and a warm welcome to all the participants. The post-results investor and analyst meet of Shaily Engineering Plastics. I hope you all are keeping safe and healthy. I have with me Sanjay Shah, our Chief Strategy Officer, and SGA, our Investor Relations Advisors. I hope you've had a chance to look at our investor presentation that is uploaded on our website as well as the stock exchange. Before I begin commenting on our business, I'd like to sincerely thank the Shaily management team and all the employees of Shaily Engineering Plastics for their persistent support in these challenging times to keep our operations running smoothly. We are taking utmost care of including vaccination drives.
Sir, we are losing your audio slightly.
Is this better?
Yes.
Okay. Now coming to business, Q1FY22 was challenging in terms of managing operations given the second wave of the pandemic. Since majority of our business is exports, we had to face significant hurdles in terms of managing the supply of our products, given the availability of containers was one of the biggest issues we faced during the pandemic, clubbed with interrupted operations and limited workforce. However, I'm very happy to share that we've managed our operations well and serviced our global customers. Despite disruptions of 2020, we managed to put our carbon steel operations up and running since December 2020. It has allowed us to strengthen our relationship with our marquee client in home furnishings, and today we're supplying 4 global products to them. We're looking forward to supplying more products in the same stream as the year goes on. Coming to our bread and butter plastics business with the home furnishings major, we're in the process of expansion of our facility at the new Halol complex, and I'm excited to share that without any interruptions due to COVID second wave, we are on the verge of commencing manufacturing at our second facility with operations starting up before the end of this month. In the toy segment, we are building a strong and credible supplier image and have become one of the preferred suppliers to major toy giants of the world. We're expanding our order book with Spin Master and now have entered into a relationship with the world's second largest toy manufacturer. That marks stamp to quality of our products and trust by these companies in us. However, due to shipping crisis, it has been a little bit difficult to manage the supply chain. Container shortages are causing shipping delays and increased cost to our operations. Barring this temporary phenomenon, these toy companies have indicated their plan of transition to third-party manufacturing facilities in both India and Vietnam from a complete China-based supply chain as it is today. We are glad that we are being part of such objective and able to contribute with our specialized skills. Some highlights on our healthcare segment. I've been highlighting on this point for quite some time now that the opportunity with the pen business, the pen market is massive. We're trying to grab our pie out of it very slowly and steadily. We have successfully signed 2 new pen development contracts, and we have many more in pipeline. We will be starting supplies for insulin in the Iran market in the coming months. To sum up, let me give you business update for the quarter. On the toys business, we have successfully started supply to the second largest toy brand in the world. In the healthcare segment, we have 2 new pen developments contracts signed and in progress. Our new facility at the Halol complex for the home furnishings major, we've started trial production and we will go into commercial production before the end of August 2021. Let me conclude now by saying that the board of directors have approved a preferential allotment of shares amounting to roughly 150 crores. We have been successful in getting marquee investors such as Lighthouse Funds and White Oak participate in this fundraise. Let me tell you that this is Lighthouse Fund's second primary infusion into Shaily, after their first infusion in 2008-2009. After their exit in 2014-15, this is now their second investment into Shaily, showcasing their trust and confidence in the long-term story of our company. We intend to use these funds towards growth of the business. We foresee utilizing these funds over the next 12 to 18 months towards expansion of our business in pharma, toys, and home furnishings. This investment will allow us to leapfrog into the next phase of growth and strengthen our relationship as a strong supplier to global brands. That is all from my side. I shall now hand over the call to Sanjay Shah, our Chief Strategy Officer, to give you an update on the operating and financial highlights of Q1 FY22. Thank you, and over to you, Sanjay.
Thank you, Amit. Good morning, everyone. I shall share with you the highlights of our operational and financial performance for Q1 FY22, following which we will be happy to respond to your queries. During the quarter, we processed 4,093 tons of polymers against 1,815 tons in Q1 FY21. In Q4 FY21, we processed 4,356 tons of polymers. Machine utilization rate was 56% in Q1 FY22, same as Q4 FY22. Please note that due to capacity additions, utilization rate looks lower. In Q1 FY21, utilization was 34%, basically due to the nationwide lockdown due to COVID. Exports during the quarter stood at 81% of the total revenue as compared to 60% in the same period last year. While for Q4 FY21, exports stood at 77%. Revenue stood at 120.1 crores during Q1 FY22 as compared to 46.6 crores for the same period last year, marking a growth of 20%. Although it is not comparable due to lockdown in Q1 FY22. In Q4 FY22, we booked revenue of 109.8 crores. EBITDA for Q1 FY22 stood at 20.2 crores as compared to 3.5 crores in Q1 FY21 and 22 crores in Q4 FY20. EBITDA margin stood at 16.8% in Q1 FY22 compared to 7.4% in Q1 FY21 and 20.1% in Q4 FY21. Net profit stood at 8 crores for Q1 FY22 versus loss of 3 crores in Q1 FY21. Cash flow for Q1 FY22 was reported at 13.9 crores as compared to 1.5 crores for the same period last year. For Q4 FY21, cash flow was at 15.3 crores. For the quarter, we incurred capex of 22 crores. We expect FY22 capex to be the region of around 80 to 85 crores. With this, I would like to summarize on our operational highlights front and let you all know that we are working actively towards diversifying our business model and you will see better trajectory in quarters to come as we want to start commercializing. This is all from our side. Now we can open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah, sir. Thank you for the opportunity. Sir, I have two questions. One, if you look at our asset utilization, it's at about 56%, what we reported in the presentation. And then we have a new asset which is lined up, in the second half. And we have raised this 150 crore also for some kind of investment. So if you could give some color on these investments that you have done so far, what kind of revenue potential do these investments have? And what is the usage of this 150 crore of the equity infusion which has been planned by the company?
Okay. So let me answer that question in two parts, Hitesh. See, when you look at the current utilization level, what you need to look at is we have been adding a machine in quarter one as well as in quarter four. And these are for specific businesses which we are commercializing as we move forward. So we have started the ramp up on toys and we see improved utilization levels as we move forward. The new plant which is being set up is basically for business which has been committed and for which we are getting new molds. So that's an additional business which we have got. We have talked about that business in the past in terms of a total revenue potential of about 180 crores on a yearly basis from the home furnishings customer. So that's specifically for that business. The fundraise is basically for, as Amit mentioned, for three reasons. As we move forward, we are seeing a lot of growth opportunities on the pharma front as well as on our existing business on home furnishings and what we mentioned into earlier. At the same time, if we have to be able to take advantage of those opportunities, we would need capital to fund on that business opportunities as we come forward. So we're seeing enough of opportunities in each of these three segments where we would basically be making investments to grow that business. So that's where we would be spending the money in. I hope, Pritesh, that answers your question.
Yeah, so I still have one confusion here. If new business will need new plant, then what will drive the utilization of the existing asset, which is at about 56%?
No, so utilization levels will improve. What we have talked about is you will see ramp up on toys, so you will see utilization levels improving in the current quarter on the ramp up on the toys. The new facility which we are setting up, you will also see a ramp up there, so you will see utilization levels improving.
What is the revenue for? Yeah, sorry.
Can I?
Go ahead, Pritesh. Yeah.
So what is the revenue potential of the current investment that we have done so far?
So we have again talked about it in the past, like total capex which we have done till date, and based on that, if you were to look at it, you probably look at somewhere between 2.25 to 2.5 for a revenue potential.
Okay. And I have one more question. Since past few presentations, we are seeing movements happening on the pen side of the business. So some projects are going commercial, some new additions are happening. Could you tell us over the next 2 years, that is 22 and 23, what revenue do you think you will be able to clock either in the overall pharma business or in the pens business, whatever you are comfortable with sharing? And based on the current platform and current molecules that we have, what is the eventual revenue potential of this business?
Okay. Do you want to take that question?
Yes. So one of the first molecules for which we will be making supplies to will be teriparatide. We are looking at starting supplies, pen supplies for teriparatide in calendar 22. So somewhere between end of FY22 and beginning of FY23. The second big molecule will come into play in FY24 and then in FY26. All in all, we are looking at ramping up the pen business substantially. Existing platforms where we manufacture somewhere close to, all in all, about 6 million pens a year. We'll be looking at doubling that over the next 2 years, and then looking at potentially somewhere between 15 and 20 million pens in 4 years.
Okay. So 6 going to 12, going to 20.
Yes.
Okay. And realization per pen, if you could.
Getting into individual numbers there will be
very difficult. Each molecule has a different realization. Very difficult to predict that or to give you an indication today.
No
But
problem.
what we have said is we see the device or the pharma part of the business going to 2 to 3x in the next 3 to 5 years. We still stand by that.
Okay.
Yes.
Thank you very much and all the best, sir. Thank you very much.
Thanks, Suresh.
Thank you.
Thanks.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Kaushal Shah from Danki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity and congratulations for a good set of numbers. Sir, continuing from this question, about capacity utilization. So currently we are at about 56%, and we have in the past, done much higher utilization. The asset turn has been upwards of 2.5 also in the past. So over the next, let's say, 2 years or so, now that the Halol capex is also coming into play, we've also had the carbon steel, now available. So this 56% can go to what number, let's say, in a year or 2 years time from now?
So the 56%, I wanted to clarify this from the last question itself. The 56% is not truly indicative. I'll tell you why. See, we have capacity.
Your voice is breaking.
When we add capacity, it's in anticipation of new business that will come on stream. So 56% includes equipment, machinery added for the toys business, which we commercialize post the quarter. So that capacity has already gone into manufacturing and is currently being utilized. So when you see the next set of numbers for the next quarter, you will see this 56% being reflected as a much higher number.
True. Okay. So potentially speaking...
What would be that higher number? So, Kaushal, typically, today, even if we look within our plant, we have utilization levels which are exceeding 80-85% in some of our plants. So, I think overall, if you were to look at it, utilization level can be somewhere between 80 to 85% sort of thing. 80%.
Sure. So, a follow-up to the, what you mentioned from, the potential revenue potential from our furnishings major client. And the number that you shared was, around 180 crores from the incremental capex. Do we anticipate to do this number in maybe 2 years' time from now?
Yes. It will be faster than that.
Okay, sure. And just 2 more questions. What Amit Bhai shared regarding the pharma and the pens business. So there also, this potential doubling of volumes in 2 years' time. So, let's say from August, again, 2 years, so should we look at FY24 as a potential, first target, so to say?
Yes.
Could you repeat your question? Okay, sorry. Go ahead.
Yes. The short answer is yes.
Okay. And one final question on the capex. So we've already spent 22 crores. If you can just, help us understand the balance part. I tend to believe that Halol, I think bulk of the capex would be done. So the balance capex of whatever 50-60 crores, that would be towards the pharma segment?
Out of the balance, 50-60 crores, over 50% would basically be in the new plant which is being set up in Halol. Because some of the equipment have come in quarter 2 and capitalization will happen in quarter 2. So that will basically happen in quarter 2. And the balance will basically be split between pharma and other businesses, including toys.
Sure. And so one final question, if I can squeeze in, any clarity on, the MEIS? We had, I think, a substantial number blocked over there. So any further update on that?
As of date, the portal is still not opened up. The ROT-DEP rates have been announced yesterday. We are still evaluating whether we will be eligible for that or not. So there is some clarity to be had from the government, but we are still getting that. I expect government would probably open up the MEIS portal and we should be able to make applications and get the MEIS benefit. So that's something which we are looking forward to.
And have we received our pending? I think it was more than 15-17 crores, if I remember correctly.
No, it was not 15 crores. It was a much lesser number.
Okay.
Current MEIS benefits which are pending to be received is about 4.
Okay, so was it MEIS and GST or something like that?
Yes, it will be GST refunds, which are on an ongoing basis. So we typically now have a much lesser capital blockage on the GST, and it's on the normal phase where we basically get refunds on a monthly basis.
Understood. Okay, that helps, sir. I'll join back in the queue. Thank you.
Okay, thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Manish Gupta from Solidarity. Please go ahead.
Thanks for the opportunity. First question was that, yours, Hasbro, would you know how much product volume they are sourcing from India at present?
Yeah, Manish. They're probably doing about $80 million right now out of India.
And how much of this $80 million is in products where you would say it overlaps with Shaily's business definition?
I would say most of it. Today, based on whatever we know, limited information which we know, I think most of it would basically be similar to what we would be able to do.
So, Sanjay bhai, Hasbro might be sourcing products in, a lot of different areas, and some of these areas might not overlap with what Shaily does today. For example, we recently went into steel furniture. So, are we still defining our definition more with, highly engineered plastics, or will we also go into other areas of toys?
I think Manish, we're defining ourselves as an engineering company.
Amit, can't hear you very well. Sorry. Your voice has not been very clear today.
I apologize. I'm in a different part of the world. No, I think we're defining ourselves as an engineering company capable of manufacturing complex products that require multiple processes.
Okay, so essentially, if we have to go beyond plastics, that's something that we will consider.
Yes.
Okay.
But depends. It has to be close to. There has to be a certain part of plastics involved.
Okay, my next question is, I think Sanjay bhai said 85 crore of capex for this year. Based on what you know at present, based on the opportunities you see, you've just done an equity raise. So I guess, can you share, based on what you know right now, what your 3-year capex roadmap or 5-year capex roadmap might be? Fully appreciate this might change, but based on what you know at present, how much capex do you think you will do over the next 3 to 5 years?
So, based on the current fundraise which we have done, what we're looking at is post the current capex which we are currently doing of 80-85 crores, we would basically be looking at a further capex of about 200 crores. 200 crores would basically be broken up into about 100 to 120 crores on the pharma part of the business for growing the device part of the business, which our own IP-led business, and around 80 to 100 crores on home furnishings and toys. As Amit mentioned earlier in his speech, we would basically be looking at putting up all of these capex in the next 12 to 18 months. And we're seeing enough of opportunities on this, so with multiple customers in these segments.
So, just to get my timeline right, Sanjay bhai, you said 85 crores in fiscal year 22, right?
Right.
And these numbers that you mentioned, which is 100 to 120 for pharma, let's just work with 100 for a minute, and 80 to 100 for furnishing. So let's just work with 80. So when you're saying 85 crores for fiscal year 22, the other 180 crores that you just spelled out, this is for 23 and fiscal year 24?
You're right, Manish. So it'll be basically spilled over between 23 and some of it will get spilled over to 24.
Okay, great. So just so that, I'm sorry to belabor this point, but between fiscal year 22, fiscal year 23 and fiscal year 24, we are looking at approximately 260 to 280 crore kind of capex.
You're right, Manish.
Okay, thank you. My next question is that, our gross block as of fiscal year 21 is approximately 300 crores, give or take, right? Am I right in understanding that our peak revenue from this gross block will be anything in the range of 650 to 700 crores?
Right, Manish.
Okay, thank you.
Yes.
And two other questions. The first one is, Amit, we are seeing a war for talent in the Indian IT industry. I don't think it will take long before it spills over to the engineering industry. Can you share, what the company has done or what plans you have for talent addition and retention to help you manage this scorching pace of growth and opportunity that you see in front of you?
Sure. So I think we've Shaily as a company. I wouldn't say the entire engineering industry in general, but Shaily as a company has been facing this challenge on some of our businesses for a few years now. You see, there are a lot of businesses where we're one of a kind in the country, and it's not so much talent retention which is an issue. It is talent acquisition which is a problem, because there aren't companies in the country where we can recruit from, where we get adequate talent to begin with. So one of the initiatives we've taken this year is, we've gotten so to speak, we've got a world-class molding expert on board who will be with us for a period of 12 months at a minimum. He's a Swedish fellow. He'll be with us for a period of 12 months, where we intend to train a lot of fresh engineers in the ways in scientific injection molding. So we're trying to create new capability, make sure that our processes are extremely robust and stable, and there's a method behind achieving that. So we've hired a lot of new engineers fresh out of college, engineers with 2 to 3 years of experience that we intend to train over the next 6 months. Hands-on training, classroom training, all of it put together, where we intend to at least retain, even if we retain 30 to 40% of the staff we've hired, we will be able to service our upcoming needs for the next 24 months.
Okay, and the last question, Amit, is that for your recent QIP, 150 crores, did you use a banker for the deal? Which banker did you use?
Sanjay bhai?
No, so Manish, we did it on our own. There was no banker on the deal.
Oh, it was done by the company's internal team. That's pretty awesome. Congratulations. Thank you for all the hard work.
Thank you, Manish.
Yeah. So Manish, I didn't point to Sanjay bhai as the answer to answer the question. I pointed him as in he was the banker.
So Sanjay bhai was the banker. Is that what you're saying?
Yes.
Very good.
No,
Superb.
Sanjay bhai did the QIP.
Okay, superb. Thank you so much.
It was a press. It's not a QIP.
Sorry. Press.
Sir, shall we move to the next participant?
Yeah.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good morning, sir. My first question is on the toys business. So, could you talk about how many SKUs do we have as of today? And as per the order book, we have around $10 to $12 million per year. So, by which quarter do you think we can reach the utilization level of, say, 1 million sales per month kind of run rate?
Hi, Aman. So we are already at that number which you're talking about, if we were to look at in quarter 2. So we currently have about 4 SKUs which we are currently doing. And we're looking at commercializing other SKUs as we move forward.
And in terms of capacity, sir, because this will be important in toys, when do you think the next capacity will be coming, or what is the peak utilization sales we can achieve from the toys current capacity?
Sorry, could you just repeat your question?
Yeah, I was saying if we are already clocking that number, so in terms of capacity in toy segment specifically, where are we, and what is the peak sales we can achieve from the current capacity in toys?
So we don't bifurcate the capacity in toys specifically. It's part of the overall capacity which we have. And as we move forward, we will basically add capacity as we add business because we are seeing a lot of potential for growth here. And as we move forward, we will basically be adding capacity to it. And typically, in terms of the utilization level, yes, you can go to about 80% and all, which is what we talked about on each of our businesses which we're looking at.
So my question was, we won't face any capacity constraint if we want to, say, increase the toys part much faster, given we have already achieved that kind of run rate.
So one reason why we did the equity raise or the fundraise was basically to expand into toys, which will basically mean we will look at setting up a new plant sometimes next year for toys, which will basically take care of the opportunities which we are seeing as we move forward.
Sure, sir, that helps. Next question is on the pens part. So maybe if you can talk about the utilization level which you think we can achieve this year as well as next year. And if my understanding is correct, auto injector are maybe on the even higher value addition part compared to, say, normal pens. So when do we see the commercialization of the auto injector pens?
Some of them have, so most of them have been supplied for clinical batches, clinical or registration batches. And once our customers receive approval, they will become, fully commercial. We expect commercialization starting in calendar 22, between the end of FY22 and beginning of FY23, with molecules coming on stream in FY24 and FY26.
And Amit, what kind of utilization are we expecting for this year in pens and next year?
We don't report individual, I'm sorry, but we don't report individual utilization levels. What we report is utilization levels at the company level.
Okay, sure. No worries.
To a question before that we do 6 million pens today, 6 to 7 million pens.
Yeah, so that was the question. So we have that capacity. So do you think in 2 years we will be able to utilize it fully?
No, that's what we're supplying today.
Okay, that number we are already doing it.
Yes.
Okay. Sure. The final set of question is on the carbon steel business scaling. So maybe if you can talk about that, and have we reached the peak utilization levels in part of?
No, we've not reached the peak utilization level. As I mentioned in my speech, we do about 4 SKUs at the moment. We will be adding another 3 in the current year before the year is up, and end of quarter 3, beginning of quarter 4, we will go to as close to full utilization as possible.
Sure. Thanks for the answer. I'll get back in the queue.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Mr. VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Good morning, and thanks for the opportunity. Just trying to, put this at a high level. Given all the CapEx that we have talked about in this call.
Sorry to interrupt, your voice is breaking. Hello. Yeah.
Yeah. Is it better now?
Yes, a little better than before, yeah.
Okay. So my question was that given all the CapEx you have talked about on this call, is it fair to assume that over the next 5 years we can see our revenue growing by 20% each year?
Rajesh, putting in a number would be difficult, but we have basically given you an idea in terms of for every rupee which we invest in fixed asset, what's the revenue which we would look at.
Right. So if I do the math, right, you are doing around 280 crores of CapEx. Your current gross block, I think, is around 400 crores, if I remember correctly. So your utilization is over 2x. So that's what I was doing. I just want to make sure I'm thinking about it the right way. The math is directionally correct.
So, yeah. So the CapEx numbers are right, and if you want to multiply the numbers which we talk about, that's the level of turnover which we'll look at over the next 3 to 5 years. Yeah.
Okay. And then in terms of
between year to year, maybe an average over 5 years would be that, as you indicated.
Yes.
Right. Not looking at the percentage growth numbers, but broadly in terms of asset, whatever we are adding over the next 3 to 5 years, this is the type of overall.
Right. And given, I would assume that your pen business is high margin compared to your injection molding business. Would it be fair to assume that we could expect 20% plus EBITDA margin?
Again,
I won't be able to comment on that.
Go ahead.
Okay. So, all right, if you can provide some guidance, right? Last year you did 20% EBITDA margin. So if you can give some idea about, what can potentially enhance it or have a negative impact on that kind of number.
So, Rajesh, what we have said, and I'll probably reiterate the same thing again, is that as we move forward, we expect margins to improve at an EBITDA level or a ROC level, and there will be 3 factors which will contribute to that. One is higher margin products as we move forward, better utilization and efficiencies, operational efficiencies which will kick in. So all of these things will basically lead to improvement in margins as we move forward over the next 3 to 5 years.
Okay. All right. Thank you. Appreciate it.
Thank you very much. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of PM from R&D Company. Please go ahead.
Hi, thank you for the opportunity. I want to know that with the current recently concluded fundraise, does the company have any plans for further fundraise in the next, let's say, 18 to 24 months? Or you believe the capital which has been raised today will really suffice you for the growth plans over this period? And the second related question there is, has any of the investors, that is the 2 sets of investors I believe have taken the larger portion, have they been provided any board seats in the current fundraise?
So I think from a fundraise perspective, we are done with the fundraise. So we're not looking at any further fundraise forward as we move forward. The CapEx which we will want to do will basically equity and then internal accruals will take care of that. So I don't see that as an issue.
Okay.
And has there been any rights given to the existing or the set of new investors who are coming in terms of a board seat?
It's a preferential deal, so there have not been any rights to be there.
Got it. Thank you.
Thank you. The next question is from the line of Saurabh Jain from Astute Investment Management. Please go ahead.
Yeah, good morning, team. Many congratulations to you on the fundraise and, execution coming through. A lot of my questions have been answered. Just wanted to check on, any update on the subsidiary in UK for R&D?
We're setting it up as as we do this call right now. Of course, UK has been a difficult market to enter in the current year, given the pandemic and restrictions in terms of travel. But we have already taken on 2 projects in the UK subsidiary for design and development, and we are progressing well. We will be fully up and running by November 2021.
Right. And this design and development is completely for our own captive purposes, right?
Yes. Yes, that's right. Yes.
Right. And this would be involving plastics as well as some other materials.
And there are full comprehensive medical device development or drug delivery device development. So it would certainly be heavy on plastics, but it could certainly involve other materials as well.
Sure. My next question is that, do you give a breakup of the exports region-wise, about 80% in this quarter, but generally it's at about 75%. Which parts of the world does this go to?
We don't give that breakup. But broadly to Europe, US, Asia and the Pacific.
Right, but would a majority of this be primarily to Europe itself? I mean,
only Europe and US both.
Okay. And just the last question, any benefits that we get out of the PLI scheme, or do we fall under any of that, or?
Currently, the schemes which have been announced, we do not directly fall into any of these schemes, but we are in discussions with authorities to see how we can take advantage of that.
Okay, got it. That's it from my side. Thank you. All the best.
Thank you. Thanks, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Hitesh from ICICI Direct. Please go ahead.
Thanks for the opportunity, sir. Sorry, sir, I could not hear you properly. Some of my voices were not clear for me. Sir, my question was, from the current roadmap, what government has, announced yesterday. Earlier, we had a kind of a 4% incentive, export incentive, as per what I saw in an old annual reports. So I just wanted to understand, and the current incentive is ranging between 4. Hello.
Yeah, am I audible?
Yeah. So yeah, sir, actually currently what yesterday's announcement is that range is between 0.3 to 4.3%. So just wanted to understand, will our incentive will be same as what it was historically, or will it, what do you expect it to decline, may decline to around, from the current level? What is your assessment, sir? Sorry, I missed the opening remarks of yours, sir. You were talking something on that.
So, incentive part of it is still not clear whether we would be eligible for incentives or not, because there is some clarity required on the circular which the government has come in, and we are trying to get that clarity from the government.
Okay. So basically, we are waiting for more clarity to get to know whether we are going to get the incentive or not. Is it, sir?
Yes.
Okay. Okay. And sir, my next question pertains to our carbon steel project. Earlier we had a kind of target of minimum 100 crores of revenue from that project. So are we on track to clock that kind of revenue for FY22?
So just what we had said was that we will basically reach that level of revenue in FY23. And I think currently, yes, we are on track to get to that number in FY23.
Great. Okay. Okay. And sir, about the toy business, we had around 80 crore of annual order. So are we going to execute that much of amount in this year FY22, or it will be again for FY23, 22 and 23?
So we will execute a major part of it in FY20.
Sorry, sir. FY?
We will execute a major part of it in FY22.
Okay. Okay, that's all from my side, sir. Thank you. I'll come in the queue. I have more questions. Thank you.
Thank you. Next question is from the line of Sachin Shah from SS Securities. Please go ahead. Sachin Shah, may I request you to unmute your line from your side and go ahead with the question.
Hello.
Yes, we can hear you.
Am I audible?
Yes.
Sure.
Thank you for giving an opportunity. So I have a couple of questions. One is, what was the contribution of carbon steel business in Q1 FY22?
So here we basically don't report individual segments, and we would refrain from doing that because that's a stated policy which we have internally. So we would basically continue with that.
But directionally, it was better compared to last year or sequentially in that time.
Yes, so we started commercial production from December. So if you look at quarter 4 to quarter 1, yes, quarter 4 there was an improvement in quarter 1 as compared to quarter 4.
Okay. And what is our plan for management team ramp up post exit of CEO in last quarter?
I'll probably let Amit answer that.
Okay.
So we have mentioned that.
Yes, sir.
Sorry, go ahead. What's your question?
No, sir, you were saying something.
Yeah, on the CEO front, we have mentioned that
So sorry, your voice is breaking.
On the CEO.
So sorry to interrupt you. Once again, we are not able to hear you clearly.
Is this better?
Yes, sir.
On the CEO front, we have mentioned on one of the previous calls that we are on the lookout. It's not an easy process, so it will be. We will take our time to find the right candidate to replace the previous CEO that we had. In the meantime, we are managing the business as we did prior to the CEO, where we are actively involved in all operational aspects of the business. We have a very strong operational team that manages each of our plants, so that is not so much of an issue. And we'll continue to strengthen that team as time progresses.
Okay. And my last question is, are you reasonably confident that execution challenge witnessed in 18-19 are now passed on, and no issues will come for execution of incremental order book as we are moving from 75-80 crores revenue per quarter in 18 to around 120-130 crore quarters or at the current state? So what's your take on that? The
challenges that we had in 18-19, we have certainly overcome those. There are new set of challenges, of course, as business grows and progresses, which we will overcome in due time. But we're confident that we will maintain this, growth trajectory as we move forward.
Okay. Thank you so much.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Sorry if I'm repetitive. We have seen gross margin declining in this quarter. So any specific reason for that, and are we expecting it to come back to normal level?
So Sunil, last quarter was a quarter when we've seen very abnormal movements on raw material prices, with prices going up from March onwards. So typically our price change happens with a lag, and because of that, yes, there has been a slight dip in gross margin. We expect that to go now as we move forward in the coming quarter.
Okay. And similar is the impact on the EBITDA margin. So I think the gross margin only is impacting the EBITDA margin.
Right.
Okay, sir. Thank you very much.
Thank you so much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. One follow-up question on a run rate basis. When do you see achieving the peak utilization or peak revenues of this $12 million toys order? And on a run rate basis, when do you think you will hit the peak of the 100 crore carbon steel revenue potential?
So on the toys front, as we said, we are currently at that run rate which we have talked about. So we are currently the business at that run rate as we talk.
So toys, you are at the peak run rate.
So we are at the run rate which we've talked about in terms of we will be looking at adding more products to it as we move forward and more customer access. So that's something which we will look at growing that as we go forward. As Amit mentioned, we'll probably be getting to a full ramp up between quarter 3 and quarter 4. So I would say when we look at exiting the current year, we will at the revenue numbers which we have talked about.
I could still understand your answer on the carbon steel. I couldn't understand your answer on the toys. Toys, you said you are currently at the peak, or actually I couldn't understand that answer.
So Pritesh, we are currently doing at the peak average revenue which we talked about. Typically on toys, there are businesses which will be there, which will have some peaks and some troughs. So we are currently doing at peak revenue as we talk about today.
Okay. Were you at the peak even in quarter 1 or?
No.
Okay. That was helpful, sir. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. The next question is from the line of Surbhi Soni from Value Quest Investments. Please go ahead.
Yeah, am I audible?
Yeah, Surbhi.
Yeah. So I wanted to understand what are our key raw materials and what sort of price movement have we seen in this quarter and the years that have gone by?
Could you repeat your question? I just didn't understand. So probably
I want to understand what are the key raw materials for us. I understand we are into plastic products and we manufacture toys and home furnishing products and pharma products there. So I want to understand what are the key raw materials and what sort of price movement in the raw material have you seen over the last 1 year and the quarter 1 year?
So we use various polymers, right, from commodity plastics like polypropylene to engineering plastics like ABS, nylon, polycarbonate, PET. We use a wide variety of polymers across our businesses. If you were to look at it, you would have seen very high abnormal movements in commodity prices and commodity raw materials as well as in specialty raw materials. Typically, you would have seen price variation of somewhere between 20-25% in that quarter.
Okay, so prices, and what kind of outlook do you have for the prices? And do you expect these prices to normalize sometime, or do you expect them to remain at elevated levels?
I think we expect prices to come down, but it's very difficult to say currently in the current situation. Because you've seen commodity prices going up all across, not only in polymers but in other commodities also. But we've seen some cooling off happening, so we hope that continues. But
Okay, got it. So sir, we've seen gross margin decline. So I wanted some more clarity on why the gross margin in the previous quarter declined when prices are at an elevated level. Are we not able to pass on the entire price increase?
so we are just this was a question raised by I believe one of the earlier participants. I just explained that typically our price change happens with a lag. So that lag is
I'm not able to hear you.
Yeah, the price change is future pricing based on their.
So sorry, but your voice is breaking.
Is increasing. You have a lag of a couple of months before the.
Can you hear us? Hello? Are you able to hear us?
I can hear you. Can you hear me?
Yes, sir. Now we can hear you. Please go ahead. Thank you.
Yeah. Price review mechanism is based on historical pricing, which means in a scenario where raw material price is increasing, you have a lag of a couple of months, or I would say a quarter before the price increase comes into place. Therefore, on a quarter-to-quarter basis, when the raw material price is going up, you will see a decreased gross margins. But in a 12-month period, it will even out.
Okay, sir. That is very helpful. Thank you.
Yeah.
Thank you very much. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to Mr. Amit Sanghvi for closing comments.
Just a moment. Thank you everyone for joining the call. We hope we have been able to answer your queries adequately. For any further information, I request you to get in touch with SGA, our investor relations advisors. Thank you and have a nice day and stay safe.
Thank you very much. On behalf of Shaily Engineering Plastics Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.